500 is too much. So let's say 100 Ghana cedis of the goods has been what damaged, So you must what allow, or you must give an allowance to what the customer in order to what trade with him what always. Okay, so we also have the set of before we go to the set of, let's do this one, the bill receivable. Okay, the bill receivable. So I said this one, anytime this one maybe one of your tenants paid the amount he's owing you, okay, because you issue the receipt to him, that one, anytime he pays the money, we call it what the bill receivable, okay. And then now maybe he paid it using what a check, so you send this check to the bank, and then the bank has what they signed it, okay, so we call it what bill they signed, okay. So it's more like this one's, cash refund to customer, cash refund to customer. So I said anything over here. Yes, I said all the items over here increases how much the customer is owing you. All these items increases how much the customer is owing you, right? So this one, let's say the customer paid his amount, but you realize that the customer did not use the correct what amount. So let's say he used what a counterfeit, right? So you must refund the cash to him. So if you refund the cash to him, his balance is going to increase again, right? So let's say the customer is owing you 500 Ghana cedis. He paid the 500 Ghana cedis, and then you realize that out of the 500 Ghana cedis, 200 Ghana cedis is not what it's not an original what money. So what do you have to do? You must refund the money to him, right? So if you issue the money to him back, his balance will increase. The how much is owing you what will increase. Now you received the 500 Ghana cedis, and then you funded what 200 Ghana cedis. So now he's owing you how much? You received the 500 Ghana cedis. He's owing you the 500 Ghana cedis, right? And then you realize that out of the 500 Ghana cedis, 200 Ghana cedis is not what an original what money. So what do you have to do? You must refund this one to him again. So it means he paid what? So it means he paid 300 Ghana cedis. So he's owing you what? This 200 Ghana cedis, right? Uh-huh. So, and then we have the interest charge on customer overdue. Interest charge on customer overdue. Customer is owing you. You told him to what? Pay, maybe you run a business, and then a customer can buy the item on credit, right? And then you guys go on what? An agreement. You went on an agreement, and then you told the person to pay it within 1 month time. If you fail to pay it within the 1 month time, you will pay an additional charges on how much you are owing me. You are going to pay additional charges on how much the person is what owing you. So now what do you have to do? You have to debit the account in order to increase how much he's owing you, right? Yes, you must debit the account to increase how much the customer is owing you. Yes, let me set my camera, okay. And then also, we have, you have the noting charges. The noting, this one is what is same as what the bank charges, right? The charges, bank charges on customer. So the customer issued a check to you, sent this check to the bank, right? And then the bank made the charges on those things. It's going to increase how much the person is owing you, right? And then you have the set of. So let's say one of your customer. Let's use the Kwesi. One of your customer Kwesi. Yes. So this Kwesi, he's owing you, right? The question is owing you. But this same customer is also your supplier, right? So maybe you buy this customer, he buys maybe phones from you, and then you also sell. He buys phone from you. So that one is what? No, let me use this. So you have the question, right? Customer and also at the same time maybe a supplier, right? So he supplies you goods, right? And also he buy what? If someone buys something from you, it means the person is what, a customer. So let's say he supplies you what, phones, and then he also buy maybe a laptop from you. Okay. So you can use how much he's owing you to set off how much you are owing him, right? So that one is what, a setup. It means this same customer is also what, your supplier. So what the measurement they require, they are right? Yes. Um, After that, you what, balance the account. You balance the account. Yes. You balance the account. So let's move on. So anything at this side, so all the items, all the items at the debit side of the receivable ledger control account. I said this receivable ledger control account. You can also call it what? Debtors ledger or the sales, right? So all the items at the debit side of this account. This is the debit side, right? All the items at the debit side of the account increases how much the customers are what, owing you. Okay, it increases how much maybe your customers are owing you. And then side this side, the credit side, what reduces what, the amount they are what, owing you. Your customers are what, owing you. So anytime you receive cash from your customer, you must do what, credit the what, the receivable ledger control account. Anytime you receive a check from him, you must do what. Anytime he pays the amount, you must do what. Anytime you give a discount to the customer, you do what, you credit it. Anytime he returns the goods, you must what, credit their account. You must credit the receivable ledger control account in order to what, reduce the balance. Okay. And then anytime you give him maybe a bad debt, you must do what, do the do. And then you have this ones. Okay. And then credit sale, you bought the goods on credit. The customer bought the goods on credit. And then the funny thing about the 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 control account is all these items would be provided. There's no need to what, do any calculations. Okay. So you would see, if you see credit sales, what do you have to do? You must debit the receivable ledger control account. Anytime you see the signed check, you do what? Record it as the receivable ledger control account. Anytime you see bill receivable with the signed, you must record it at the what's the receivable ledger control account. Okay, and then all these items. Anytime you see all these items, you must what, record it at the credit side of what, this account. Okay, yes. So you just have to state the formula and then you what, keep on recording. Or with this one at the SHS, we call it, when I was at the SHS, we call it the feeling. Okay, we call it the feeling because all the items will be given. What you have to do is to know whether to record it at the receivable ledger control account or the payable ledger control account. So we have to study the items and then get the meanings of what it's. Okay. Yes, let's move on to the other one. And then this is the format of the payable ledger control account. Okay. So all these items reduces how much you are owing to the supplier, right? So this one is what, the supplier, the supplier. Okay. Uh, this one talks about the supplier. Let me write it here. The supplier. This one talks about the supplier. Okay. So credit purchases. You know, I said, but the purchases has which balance? Purchases has a debit balance. Purchases has a debit balance. So you bought a goods on what? Credit. It means you are owing someone. So you become what? The creditor, right? You are owing someone. So you become what? Creditor. And then creditor too is a liability. And I said all liability has which balance? A credit balance, right? All liability has a what? A credit balance. That's why we credited this one. So anytime you buy goods on credit, or yes, anytime you buy goods on credit, you do what? Credit the account, the payable ledger control account, or you have the purchases ledger control account, or what, or I can't find, or something. Okay, and then so all these items increases how much the business is owing towards the suppliers, right? All these items increases how much the business is owing towards the suppliers. And then all these items what reduces how much the business is what owing to the what outside. Okay. To their outside customers. Okay. Uh-huh. So what you have to do is to what study the formats. You have the discount received. Discount received is at the debit side of the what the purchases, and then the discount allowed to is at the what the credit side of the what the receivable, right? Um, you have the return outward. You have this one. You have this cash paid to suppliers. So anytime you buy car, you pay your suppliers. You must what debit it. It means they have received the amount, right? Uh, they have received the amount. So what do you have to do? You must direct it. Check pay to the suppliers. So the suppliers are the ones receiving the amount. So what do you have to do? You must debit it. Bill payable. You paid your bill. So you must do what? Discount received. So which means you received the discount from the suppliers. So it's going to reduce how much you are owing to them. You have the return outward. We also have the return outward. So the return outward to what do you have to do? You must debit it. Okay. You bought a goods from the suppliers, and then you realize that some of the goods are not working properly. So what do you have to do? You must return it. If you return the goods, what do you have to do in your account? You must record that very transaction in the at the debit side of what? The payable ledger control account in order to reduce how much you are owing to them, right? And then you have the sales ledger set off. This one is to the set off. You have a customer, and at the same time this same customer is also your what? Supplier, and then you are owing the customer too is owing you, so you can use that very amount to set off to pay him, right? So let's say you are owing the customer, you are owing someone, a customer, right, 500 Ghana cedis. Okay, and then this same customer is also your supplier, right? It's also, so you are, so a customer is owing you 500 Ghana cedis, and then this same customer